Okay, good evening, everybody. It is November 16th. I think it's November 16th, right? Let me see. Yeah, November 16th, Wednesday, 2022. We were reporting live here from Midtown Manhattan on 33rd Street, Madison Avenue. It is 8:48 p.m. Eastern Time. Really quick, we do have some breaking news, and I think it's appropriate just to bring it up because I think it will impact the markets. So news just breaking now, I believe the Republicans have won control of the House. So far, Republicans have 218 to the Democrats 211. And obviously to win the House majority, you need 118 seats. We still do not know the final results for the Senate. As it stands right now, the Democrats have about 50 seats to the Republicans 49. So it's a very, very tight race, very, very slim majority here. But it's important to talk about because if you've been listening to the live streams, we've been doing some data analysis as to market conditions based upon which particular party holds the majority of the power. So quickly wanted to get that out of the way. We have three main things to talk about tonight. It's going to be a pretty light night tonight. I'm a little bit tired, so we're just going to sort of hang out. We did get some home builder sentiment data coming in. So home builder sentiment dropped to the lowest level in nearly a decade. Okay, and I think this is going to be a proxy to the data that we get out on Friday, which is when we're going to hear from the National Association of Realtors as it relates to existing home sales. So obviously today, we got the home builder sentiment index, right? So that is mainly geared around new homes. So we're going to talk about what the respondents said. But obviously buyer traffic is way down. Current sales conditions are way down. And something interesting, home builders in general across the board are turning to things like buying down customers' points just to save the deal from going bust or reneging on their contracts. So we're going to talk about those particular things. We're going to do a deep dive. Two major earnings reports we need to talk about today. Horrible numbers out of Target. Really disappointing stuff there. Target reporting EPS of about $1.54 when the street was expecting $2.13. Some crazy stuff. Crazy stuff coming out of that report. So we're going to talk about the crazy stuff coming out of Target. Very disappointed there. Walmart did report earnings yesterday. We're going to do that deep dive today. Walmart reported significantly better results than Target. Obviously, the two play in a very competitive space. And we're also going to talk about shoplifting. Okay, so hold that thought about shoplifting, because if you remember when Rite Aid reported their Q2 earnings report, the CEO actually came on the earnings call and was complaining about shoplifting. So we're going to talk about that tonight. Quick look at the bond market. Okay, the 10-year U.S. Treasury yield is trading at 3.725%. Let's take a quick peek at futures. S&P 500 E-mini futures contract trading at 3,976. And if you notice, this is what I'm keeping my eye on here very closely. We are rallying right into the declining 200-day moving average. Okay, this is very important. Bear market rallies tend to conclude right at the 200-day, just as the S&P 500's summer rally concluded on August 16th. Right at the 200-day. Quick look at the NASDAQ E-mini futures contract, so the NQ, NASDAQ 100. We're up about 33 points, trading at 11,772. And last but not least, the Dow 30, ticker symbol YM. We are also up about 53 points, 33,644. That is all I have for you guys. So let me put away my laptop and then we will head out and we'll say hello to everybody in the chat. But I'm wishing you all a very healthy and safe Wednesday evening. Already halfway through the week. Tonight we're going to be headed uptown on 5th Avenue and we will get started. So once we get down to the ground floor level, I'll say hello to everybody in the chat, just for sake of time. So allow me to do that. Western Mass Dave, good to see you. I think we're gonna head to maybe Bryant Park area tonight. Hey, photos from around New York. It's chilly weather in New York City. Yeah, extremely, extremely cold. You know, I actually just got in, I mean, most of you guys know, if you saw the stream yesterday, got in from Miami, Florida. It was 80 degrees when I left. And then when I came to New York, really, really snowy, windy. I mean, not snowy, rainy, windy, all the good stuff. Everybody in the chat tonight. Sally, good to see you. Have a good night, man. See you later. All right, team, we are officially ground floor, which means I have to say hello to all of our viewers that joined tonight. So Prince Ice, good to see you. Delia Kelly, Julia M, Otto, the ABX girl, the one and only. Chris Beeman is here. Paul Greenwell, welcome by the book. British Gray from Tampa, Florida, NNB 045. Tone Rick says good evening and happy Wednesday, Tom. Thank you, Tone, appreciate it. Savi is here. Rosario TR70 says hello from Brazil. Carol S says hey, Tom in chat. Steph H, William Travis says what's up, people? Good to see you, welcome. Lila says hey, Tom and everybody. Austin City Limits. Lee says, Tom, Republicans apparently won the House. Thoughts on the market? Yeah, so I mean, I guess it's breaking news now, right? I mean, it took a long enough time to get those reports in. Now, it's by a very, very slim majority, right? And I think we're still waiting on the Senate. So I don't think I can give my conclusive market thoughts on it unless we have the Senate data in. But obviously, you guys know, as we've been talking about on the live stream, that the most favorable environment historically for equities markets is when both the Senate and the House are controlled by Republicans, and when we have a Democrat as our president, which we do, President Joe Biden. So I do not think the Senate is going to turn red, but look, time will tell. We're still waiting on the results, but definitely took long enough. Oh, Austin City Limits says Dems did win the Senate. Okay, so we got a mixed bag. Mona Diaz here, welcome. Good to see you. Western Mass Dave. Edward Adams, welcome. Funky says, do you always work this late? Yes, I do, unfortunately. Ryan Royal is here, welcome, welcome. Nista Brooks, Fairway, Tug Carter. And I see Dan Zhang says, hey, Tom, how was your day? Day was pretty good. Very busy, a little bit tired from all the traveling. Had to give a lot of presentations tonight, but it is a beautiful night. Weather has improved since yesterday. If you remember on the live stream, it was crazy rain, wind, but it's actually pretty nice. We are now looking at a beautiful view of the Empire State Building here, lit up in the classic white. But on tonight's live stream, we're going to be talking about a few things. First of which is going to be Target's earnings report, ticker symbol TGT. Now, Target, in my view, could not have reported a worse quarter, in my view. Very, very disappointing. So we're going to be doing a deep dive into that. I think management should take some of the blame as it relates to inventory, which we are going to be talking about, because if you take a 3-month look back, right, and many of the big box retailers have been dealing with inventory issues, obviously coming off the COVID-19 pandemic, with the supply chains all messed up. A lot of these big box retailers like Target and Walmart have had big inventory builds. But I think in Target's case, it has to do with management bringing in products that customers just don't want to buy, right? So if you do a 3-month look back, 3-quarter look back, you are seeing deceleration in inventory build. I think inventories were up 14% year over year this quarter, as opposed to I think 34% and 45% respectively in Q2 and Q3. So that's good news. But I think the biggest miss out of the entire quarter, which is really, really almost upsetting, I guess, in a way, and we'll go into this, we'll talk about it, is all of the shoplifting. Now, did anybody listen to the earnings call when the management of Target came on and they actually stated that they had about a $400 million hit to margins due to organized retail theft? So I'll say that again. So Target saw a boom, okay, in shoplifting, up nearly 50% year over year, and losses have totaled more than $400 million impact on margins. I mean, to me, that's just unacceptable, not as a company level, but just from a country. I mean, there's definitely reasons why shoplifting and retail theft are up so much. Really quick, this is the beautiful One Vanderbilt building. We're going to be headed uptown tonight, but I think we're going to walk up Fifth Avenue because we walked up Madison last night. Hey, Kevin Ramsey is here. Good to see you. Thanks for being here. Zozo Bob says, is Target blaming shoplifting for their bad earnings? Yeah, I mean, Bob, I think, we could scapegoat that all day, right? And say the one reason why Target reported a bad quarter is because of theft. But to your point, it's not only that. If you listen, now there's some commonalities here I'd like to discuss. Does anybody notice the stark commonalities between the verbiage that was used on the Target earnings call and the Walmart earnings call? It was almost like you were listening to the same call in many respects. And what I mean by that is this: consumer behavior has materially changed. And consumer spending is shifting towards more affordable goods, particularly as it relates to the store brand versions, like the value brands, right? So Walmart saw a big uptick in consumers coming to stores and purchasing lower cost, although high margin for Walmart, store brand, cereals, products, toiletries, as opposed to the name brand ones, right, from, maybe General Mills, things like that. But Target saw the same exact thing. Now, here's another interesting statistics that came out from the call. 75%. Hold on, I'll just give you guys, I want to point this out before I forget. So I think it was my good friend Rick yesterday pointed out the reason why the Empire State Building was lit up in green yesterday, if anybody remembers that. And it's because there's a brand new Starbucks Reserve Roastery right in the ground floor here of the Empire State Building. So I think they have one of these downtown as well near Chelsea Market. Now, I'm not sure if anybody's been, but I think we've walked past it before on the live stream. They're like these Starbucks stores, but they're almost like it's on steroids. It's, I don't really know how to explain it, but it's almost like a mini mall in there. It's really, really interesting. Let me see if I can walk a little bit further down here and show you guys just so you can see inside. But I think it just opened yesterday. I think these Reserve Roasteries even may sell alcohol here too. But yeah, this is a brand new addition to the Empire State Building. And I'm glad they filled it with something, right? Because we used to walk past this retail space and it's been vacant ever since COVID. So that's good news. Hey, Outer Haven is here. Good to see you. Richard says, I work at Target and I just don't see 400 million walking out the door. Sorry. So Richard's maybe some allegations of cooking the books there. I don't know. I'm just reporting what I see in the earnings report. But we'll see. So check this out. Back on to Walmart. Here's something interesting. 75% of its market share gains in food, okay? So this is food and groceries. 75% of market share gains for Walmart last quarter came from households making over $100,000 a year. So if that doesn't give you a pretty good characterization of the economic environment we're in, I really don't know what will, okay? So, and we talked about this briefly on last night's live stream. We were talking about competitors such as, Amazon's Whole Foods, where they tend to be very, very expensive. And due to the economic environment, due to the inflation, okay, due to the news of job loss across the board, it seems as if consumers are spending down and reappropriating their spending towards more value. So that plays right into the hands of Walmart. Tahoe 814's Target was booming in State College, Pennsylvania on Saturday. And so is every time I walk into Walmart, it's the same thing. Let me try to cross here. Might as well take a look inside. I've never been in here. Mona D, good to see you. Zozo Bob says Walmart's home delivery service is very good. So here's another thing, Bob. It's a very good observation you make. Because if you look at the e-commerce sector of Walmart as opposed to Target, Walmart does a fantastic job in growing their e-commerce revenue. And if you think about mitigating theft risk or shoplifting risk, if you can really double down or triple down on e-commerce and food delivery, it's probably going to be harder for people to commit fraud that way, as opposed to going into the stores and stealing items. Now, we did have somebody in the chat that says they do work at Target and they have a very, very hard time believing that theft is on that amount. So I will comment and I'll say this. And again, this is very anecdotal because I'm pulling this data, okay, from Rite Aid's earnings report. Does anybody remember when we went over Rite Aid's earnings report last quarter? And they said specifically the vast majority of their shoplifting and their theft is in major cities such as New York and San Francisco. Again, this is not me saying this. This is a direct quotation from the earnings report. Now, Target didn't come out and say that. Target did not give specifics on which market made up the vast majority of the theft, but I wouldn't be surprised if it's the same. Michael Joseph says the national grocery chains prices are inflated so much and Walmart can still keep low prices because there are huge people switching to food shopping at Walmart. Yeah, that's exactly what it said in the report too. You're 100% right. I've even, and I told, not to sort of sound like a broken record here, but I've even noticed myself grocery shopping at Walmart. Of course, when I'm in Miami, Florida, there's no Walmart here in the city, but it's a good point. Jay Victor is here, says hello, Tom. Good to see you, Victor. I see my good friend Vinny Castellano is here. Hey, Vinny, good to see you. Sparks Carnival says, well, Target did state a lot of the shoplifting was through organized group. Yeah, I think they said organized retail crime. Organized retail crime, you're right. The ABX girl says Target has shoplifting issues in the South where wages are worse. Thank you for that, ABX girl. Cindy Foley is here, welcome. Yeah, so I mean, look, if you're gonna be long, right, one of these companies, it probably should be Walmart because I would say a couple reasons. Broader reach, better infrastructure, and better expansion into e-commerce. And let me know if the wind noise is getting in the microphone. It is getting a bit windy. It's usually windy on 34th Street. But I quickly want to show you guys Herald Square because they put up all the Christmas stuff already, which I was rather surprised about. But hey, MSK is here. Says, hey Tom, I've been to the Westfield in San Francisco last month. Saw a bunch of shoplifting in the busiest time. The police car was right in front of the gate, but they did nothing to prevent it. Interesting. Thank you for that. Carlos Ramos says, I believe the number one shoplifted is cosmetics. Really? The number one shoplifted products is cosmetics? Is that true? Now, if you were to ask me what is the most shoplifted product, I would not have guessed that. Huh. So Carlos Ramos is telling the number one category typically shoplifted is cosmetics. Walmart has that area coordinated or roped off with an attendant. I don't see Target doing that. That's really interesting. Well, I will say this is some data here in New York. The wind is brutal here. That's the first piece of data. The second piece of data is every time I go into the CVS, and if you want to purchase something, you have to call the attendant over to unlock the case and get it out. Even for something as simple as toothpaste now. Oftentimes I'll frequent the CVS at Columbus Circle, and it seems as if a lot of the products are behind this sort of, not like glass encasement, it's like a plastic barrier. Anyway, Lisa specializing in solving organized retail crimes committed at Target stores through video and image analysis. Lisa's Target runs one of the country's top forensic laboratories. Well, it doesn't seem like they're doing too good of a job with it. But again, I think it's just the economic climate specifically why you have an uptick in crime. Because I think we could say two things, and then we'll sort of move off the topic, but I think it's important to talk about it because it was a big issue in Target's earnings report and Rite Aid. Now, I think there's two things at play, and let me know if you guys agree or disagree. The first thing I think that's at play, I know what you guys are thinking, it's, very laxed laws and punishments for petty crimes like shoplifting. I don't think that's the number one issue. I really don't. If I had to guess what the number one issue is, as I'm giving you guys a really nice view of the Empire State Building here, it's the economic climate overall, right? What did we just talk about as it relates to Walmart's earnings report? The CEO came on the call and said specifically the vast majority of growth, 75% of new market share growth came out from customers with a household income of $100,000 or more. So if people that are making $100,000 or more are choosing to shop at Walmart for lower prices, well, what do you think the lower and middle class people are being forced to do, right? They're probably being forced to scrounge and steal because they don't have jobs. It's a very interesting dichotomy we have going on. Brooks says, here's an interesting fact. The number one selling item in Walmart across the nation are bananas. Didn't know that. That's interesting. So you have record inflation. You have record shelter costs, right? We talked about the CPI report. 33% of the CPI report is made up of shelter costs. That accelerated at the highest pace on record. So consumers are hurting. People are hurting. They're trading down. So we are now outside of Macy's Herald Square here. And it seems as if they're about to unveil the windows. These are the very famous Macy's windows here. It says no peeking. Looks like a couple people are peeking. Now, if I remember correctly, this is probably a little bit early for the Christmas decorations to go up. So let's cut back over to 6th and head to Bryant Park. Robert says, but there are jobs available, Tom. Unemployment is low. Yeah, I mainly try to look at the labor force participation rate as a little bit of a better proxy. I do understand that there's jobs readily available. I get that, but if you really take a deep dive and dissect the health of the economy, I don't think it's healthy as, maybe some of our politicians may appear it to be. I think it was a very lopsided recovery, right? And we talked about this before. I really truly believe that, wealthy people are better off, and it's been increasingly harder for low and middle class income earners to sort of get ahead. And I think that's why we're sort of seeing that divide there. But you are right. Unemployment is still at near record lows. Ooh, yikes. Guy almost got hit. Oh, jeez. Yeah, well, you can't stand in the bike lanes, man. You got to watch out. So before I forget, let's quickly talk about a major piece of economic data that we received today. Oh, speaking of a drugstore, I think this one closed down. I think this used to be a Dwayne Reed. Hopefully it didn't close down due to shoplifting, but I used to go in there sometimes a lot. Anyway, so we got a big piece of economic news coming out of the housing market. So we heard from the Home Builder Sentiment Index, and it was not good news. Okay, so the Home Builder Sentiment dropped to nearly a decade low. Now, current sales conditions fell 6 points to 39. Buyer traffic dropped like a rock 5 points to a 20 reading. And this is the 11th month, or the 11th consecutive months of declines. Now, home builders unanimously are attributing the reason to all of this negativity to higher interest rates, obviously, right? So I believe as of recording this video, the 30-year fixed rate mortgage is going for 7.32%. So out of all the respondents, it seems as if a lot of these home builders are having to do a couple things to save these deals. Just let me move past the construction pit here. We'll wait for the truck to pass. So home builders are having to do a lot to try to save deals and close deals. So one of the things that they're doing that caught my eye out of the report was they're paying down buyers' points, right? So let's say if you take out a loan and you have a 30-year fixed rate mortgage, sometimes the mortgage will come with points. It's usually like 1 or 2%. In order to close deals and in order to keep customers from reneging and closing their contracts, home builders are doing more stuff to save those deals, such as paying down buyers' points. So here's what I think is going to happen, and I think it's pretty consistent with what we've been talking about and sort of our forecasts. You're really seeing interest rates drive housing into a recession. I think it's safe to say, unanimously, we could say that housing in the United States is in a recession. Okay, we know this from a couple of different indicators specifically, both leading, coincident indicators, and those are as follows. Let's try to skate around here. Somebody's trying to buy a newspaper. And that is as follows. The permits, or housing permits and housing starts, are cratering and falling off a cliff. That signals a leading indicator that there's going to be very limited or declining demand in the housing market or for housing starts, because interest rates, the cost of money is just so high. Also, not even interest rates, but the cost of labor is elevated and very high as well. Also commodities, and if we want to talk about existing home sales, what are we going to get on Friday? So this Friday, we are going to hear from the National Association of Realtors as they report existing home sales. And I think that is going to decline for, I think, the 9th consecutive month now. Hey, Barrington James, thank you so much for the $5 donation, my friends. What's up, Tom? Hello, my friend. And to my new sub, hey, thank you so much. Thank you for the support. I appreciate it as we head towards the Bank of China in Bryant Park here. Steve CR says buying a house is fine. Getting a loan for the house is not good. So Steve CR. Using people says, so it's not worth buying a house right now. Question mark. Well, I can't really advise that, but if it were me, right, if I was in the market to buy, let's say, a single family home or something like that, I think prices are going to come down, and I think they're going to come down quite materially in Q1 and Q2 of next year. Because the first thing that happens in every cycle is transaction volumes dry up, which we've been seeing, right? Every single leading indicator and the bond market is telling us that you're going to see a recession in housing, and I already think we are in a recession in housing. So I think, you know, if you wait a couple quarters, I think you're going to be able to get very, very favorable deals and also conditions in the buyer's favor. Okay, we're just coming out of a historic seller's market, and now we've done a complete 180 and flipped probably to a buyer's market in terms of conditions already. As we just talked about, you know, home builders are doing everything they can to save deals and acquire new deals, such as paying down points, providing additional dollars for renovations, new appliances. So I think you're going to get a good deal here. Julia M says, Tom, probably down 20%. Yeah, maybe. I think in select markets, you're 100% right. Now, what usually happens is the national average declines less than specific markets, but to your point, I think we're going to see isolated markets that were really, really turbocharged during the COVID pandemic. I think they're going to come down more so than other markets. Really quick, everybody, we are now at the Winter Village here at Bryant Park. This is on the corner of Avenue of the Americas and 41st Street. Running at altitudes, these bubble markets will take the biggest hit. Yeah, I think you're right. I think certain markets where people were trying to escape big cities to suburbs and paying, you know, $100,000 over asking, waiving inspections, those are the markets that I think are going to take the biggest price decline. I think we're already seeing markets like Denver, Colorado come down quite substantially here. And also Boise, Idaho is having a very, very heavy decline right now. Hey, Sparks Carnival says, Tom, Amazon stock is down 46% from its all-time highs. AWS was disappointing, but the cloud industry will only grow. I think it is good value, says Sparks Carnival. Well, here's where I think we need to be a little bit careful, and here's sort of my take on that. Usually as the market emerges into a new bull cycle, and this has been a very, very aggressive bear market, you usually have a completely different set of new leaders. If you look all the way down here, you can actually see the One World Trade Center. As we emerge into a new bull market, I'm not saying we are, but at the time when we do, you're not going to see, in my view, the old true market leaders be the new true market leaders. If you look at the data, it shows that the true market leaders of the past, only about 8% of the time are those old true market leaders, the new true market leaders in a new bull cycle. So I think we're going to see new emerging merchandise emerge here. And so if we do have a big breakout in the S&P, I think it's going to be led by new merchandise. Now, I know what the big question is. What is that new merchandise going to be? Well, as of now, it seems as if a lot of the biotechnology and healthcare stocks are leading the market, which is actually not good news for me because I hate trading biotech and healthcare in general for reasons that you guys already know. It's definitely not my area of expertise. My area of expertise is enterprise software. Hey, CM is here. What's up, CM? Good to see you. This is New Drivers. Good to see you. Paul Meddy is welcome. Stephen Bates is here. Says hello. Vinny Castellanos says, Tom, I'm bullish on Disney. They had a little bit of an iffy report. Disney definitely had a mixed bag of earnings. George Romano says, Tom, buy IBM. So, George, did you see my tweet that I put out, I think about 2 or 3 days ago? Now, if you follow me at Walks Wall Street, now, if you look at IBM, I think IBM's yielding like, 4.75%. So it has a big, monstrous dividend yield. And when all of the major enterprise software stocks and the tech stocks in general are down, 50 to 60%, IBM is trading near 52-week highs and near all-time record highs. So pretty weird kind of world we're in now. Nori says, good evening. I hope you're well. I hope you're well too. Thanks so much for being here. Hey, John says CDW, SHI, or Global, or Insight Global, which is better. So I deal with all three of those vendors. This is a really nice Tesla, by the way. Love the color scheme. So I deal with all three of those companies almost every single day. And I deal with CDW the most because a lot of my customers are in the market of replacing a lot of their Cradlepoint routers. So I'm not sure if anybody's familiar with that, but as of now, that a lot of these carriers are rolling out 5G networks, they're replacing their Cradlepoint routers, their existing suite, because they do not have the appropriate modules to run 5G. So there's a big boom, especially in large enterprise customers I work with, where we're doing a complete rip and replace on router sets, Cradlepoints specifically. And CDW does a really good job with leasing. So for anybody who's familiar with, like a Cradlepoint 5G router, these things could be $2,500 a pop, right? And if you have, 500 to 600 locations, that's huge capital expense. So what CDW does really well is a leasing sort of model where you essentially pay a monthly fee for each router, and then you have about 24 to 36 month upgrade cycles depending on the new product set that comes out. And then what we'll do is we'll manage their Cradlepoint cloud to manage those devices. But anyway, yeah, I deal with them a lot. CDW, Insight, they do a lot of business, a lot of volume. Millie says Bros, BROS, Dutch Brothers Coffee. Speaking of coffee and speaking of the Chinese equity markets, we briefly discussed, we were briefly talking about Luckin Coffee that was delisted from the American exchanges, but it does trade over the counter. There's a very famous investor who used to work at Ziff Brothers Investments, and I think Ziff Brothers is actually right down the road here and to the left on Park Avenue. That is now, I think, a 1% equity stake shareholder in Luckin Coffee. Solf says, I just walked past you. I hope you have a good night. Hope you get to where you're going safely. Got yours. So you think full-on recession or soft landing in 2023? I do not think we're going to have a soft landing. I think we're going to go in recession. Man, that truck is really loud. Okay, so here we are across the street from the Steven Schwartzman building. I was actually in here a little bit today. Really, really beautiful. Good place to sit and get some work done. Barrington James is nothing is soft landing. Well, I mean, all of the leading indicators and a lot of these earnings reports are pointing towards at least recessionary activity, right? CEO of Walmart, CEO of Target coming on and saying that customers are trading down. So their main clientele are not only that used to shop at, you know, Walmart and Target frequently, they're trading down and buying store brand items, right? The value brands. 75% of new market share at Walmart came from customers making a household income of $100,000 a year. Okay, so if people making pretty good incomes are trading down, trying to save money by going to Walmart, well, also look at housing. You know, housing, there's an old saying that housing is the business cycle. Has anybody ever heard that saying? I'll give you guys another quick shot of the Steven Schwartzman building here. Hey, Maria is here. Says, hey, Tom, beautiful night in New York. Good to see you, Maria. The No Spin Windows says, Tom, headline from Moscow Times an hour ago, Russia falls into recession. Steve CR says, hard recession, as in hold your money and stock up on supplies. Yeah, high cash reserves, I agree with that. Blues Writer, what's up? Good to see you, Blues Writer. Nicholas Sturra says, hey Tom, I know you don't like to make it political, but what's your reaction to Trump officially announcing that he's going to run in 2024? Yeah, so we could talk about that for a minute. So I think it was expected that Donald Trump was going to run for president. So what is going to happen now, and this is just sort of my opinion, right? You guys could do with this information what you may, but this is going to be over 16 months of total time suck and time wasting across the board, especially if you spend a lot of time on big social media platforms. So what I've decided to do is physically mute all keywords that associates with presidential elections, Joe Biden, Donald Trump, and the like. Because what's going to happen is you need to be very, very protective and cognizant of your time. And with Donald Trump running, you are going to be baited into political arguments. You know, you're going to see all of the politicians on the right and the left, you know, putting out very clickbaity tweets, clickbaity Facebook posts, you know, sound bites on the internet, just to try to stir you up and get you going, right? It's just going to be endless on Fox News and on CNN of just nonsense. And I don't want to allow that to take up any of my time. So I have officially, I think as of last night, I put out a tweet, just go mute all of the keywords, okay? Don't allow people to waste your time. You don't even need to see these political tweets. Focus on what you got to do. Focus on excelling. We're about to go into a brutal recession, and you cannot afford to even have 20 minutes, 30 minutes spent on reading, you know, Elizabeth Warren's tweets or, you know, Ron DeSantis tweets about the presidential election. You're not going to change anything. It doesn't matter, and you got to focus on what you got to do. So that is sort of my take. I'm not saying I'm right. I'm just saying that is what I'm going to do. Because it's obvious everybody knows Trump was going to run, but it's going to be nonstop, just political barrage on all of the mainstream outlets and social media platforms. And there's no new information. It's just going to be fighting, and you got to be protective of your time. So, Ken Glasses, Tom, you're very smart, agreed. And a lot of it is political bots too. A lot of these people that are putting these, you know, political baiting arguments on social media, they're not even real. They're bots. So just block it out and don't let it waste your time. All right, guys, check this out. This is absolutely gorgeous. So we are now looking at the Chrysler Building, one of my personal favorite buildings in the city. They already have some of the Christmas decorations up. We are standing right under One Vanderbilt building. Hey, the No Spin Windows says, hey Tom, China's real estate market is in recession mode. Russia is in recession now. The United States, a global recession is real. You know, it's interesting you bring up the Chinese real estate market, and I'll tell you why. Does anybody remember me? I'm sure you guys do if you've been watching the stream for probably over maybe 6 months now. I've always been saying, and if you guys want to check this out too, look at a lot of the commercial paper market funds, like the Crane Shares commercial paper market Chinese funds. And the Chinese commercial paper market looks so horrible. And it doesn't seem like anybody else on Wall Street is paying attention to this. And I think we're starting to see these dominoes fall here. What I want you to do, look at the Crane Shares Chinese commercial paper market indice. Zoom out to a monthly time frame. And look at the price levels where we're trading at now as opposed to where we were in 2020. If you think that there was a liquidity crisis in 2020 during COVID, what do you call it now? And I'll let you guys sort of decide for yourselves there. Anyway, all right, so Pershing Square right here. This always reminds me of billionaire Bill Ackman, CEO of Pershing Square Holdings. Edward Adams says, Tom, you got to do the observation deck at One Vanderbilt sometimes. Yeah, I mean, a lot of people have been telling me that. I have not had a chance. Maybe I'll carve out some time before Thanksgiving to do it. Hey, Nick says Chrysler Building 10 out of 10. Sandra Dickinson, good to see you, my friend. Welcome to everybody in Toronto. Mike C says, I owe Tom hours and hours by discovering you could mute certain keywords on Twitter. Yeah, that is a pretty big life hack there. So let's quickly recap the specifics here as we head towards Park Avenue. So Target, obviously very disappointing quarter. So earnings per share, EPS, came in at $1.54. When many analysts on Wall Street, the consensus was for $2.13. So really, really big miss there on the bottom line. However, they did beat a little bit, very, very slightly, on revenue, coming in at $26.52 billion versus the $26.38 billion that was expected by analysts. Now, the chief growth officer of Target came on the earnings call and talked about price sensitivity. I mean, if they used the term price sensitivity once, they must have used it 1,000 times on the call. They said price sensitivity intensified during the last 2 weeks of October with additional pickup towards the last weekend near Halloween, where you had consumers buying fewer full-priced items, looking for discounts, and a material uptick in coupon use and promotions. So, could we use this as a proxy, sort of like its own leading indicator for the health of the US consumer? Well, maybe. And here's something interesting. We did get consumer spending data for October, and it was actually pretty good. Consumer spending increased in October, but it seems as if in pockets of the economy, consumers are very, very worried and cognizant about what they're spending on and looking for deals increasingly. Hey, God Door says they're talking about me. I never pay full price for anything. It's my fault. It's smart, man. Lexington Avenue here, 42nd Street. We are now directly under the Chrysler Building. I'm gonna take you guys down here a little bit. This is the back section of Grand Central Station. You can get the 4, 5, 6, 7, and S train, or the S is the shuttle. It'll take you to Times Square. T says, what's the percentage of people wearing masks in New York? I have no idea. No idea. All right, what do you guys think of this view here? This is a view directly under the Chrysler. Now, we've been talking about trading down and buying store brands. So I think it would be interesting to take a quick poll just to see what the sentiment is out of the people in the chat. Now, in your buying behavior, if you, let's say you buy Honey Nut Cheerios or something like that for your family, do you see yourself trading down and buying the store brand, like the value brand at Walmart, the value brand at Target? Just like a lot of the C-levels at these organizations are claiming that a lot of consumers are doing. Hey, Troy Atman, what's up, man? Good to see you. Hey, Remy is here. What's up? This is beautiful Art Deco lobby. Yeah, it's definitely one of my favorite buildings in New York, right here on the corner of East 43rd Street in Lexington. They have the best dollar pizza place, by the way, like a block away from here. But we are gonna head up to Park Avenue. Hey, Vonda Howard is here. Good to see you. Dan Zang says, Tom, I buy everything on Amazon now besides grocery. So where do you get your groceries from? Just the local stuff? Western Mass Dave says, Tom, you should at least try generic brands once. It's a gamble, but you'd be amazed. Well, if I'm gonna buy like vegetables or frozen food or something like that, I'll buy the store brand because it's usually 99 cents. And I mean, frozen green beans from Walmart is the same thing as frozen green beans from Bird's Eye, right? You know, I look at the package, the frozen package of Bird's Eye, of Bird's Eye frozen vegetables. It's like $3.50. But if you buy the Walmart version, it's like 99 cents. And it's the same thing. Dan Zanks is Stop and Shop, BJ's, and local Chinese supermarket. You know, when does Costco and BJ's report? Now, Costco and BJ's are coming off the back of two very, very strong quarters. Mike sees Costco Kirkland store brand is often better quality than the name brand. The only issue, I think, with that, well, at least for me, let's say if you're single, you're only buying for like one person. You know, in order to buy really anything at Costco, you got to get massive, massive quantities. And that's difficult. I don't think I could ever run through all that. Hey, Natasha P says, I do Whole Foods delivery for groceries. Convenient and excellent experience justifies the price. Well, Natasha, that's interesting you bring that up because I believe the grocery chain who will dominate going forward is the grocery chain who is going to be able to make a seamless user experience in sort of like a mobile order and pay and delivery. Because once you saw Starbucks really roll out their mobile order and pay system and they got it down, same store sales and user traffic and repeat buyers exploded. So I think to your point, obviously Whole Foods is probably poised to be the market leader in that, obviously because Whole Foods is owned by Amazon, right? They have the infrastructure, but I would say a close second will probably be Walmart. I think Walmart will probably be a close second to that. So good points. John Sorley, good to see you. Wendy England, thanks so much for being here. Dan Zanks, Tom, I gotta admit, food waste does happen sometimes when I go to BJ's. Steph UH. So we buy groceries, BOGOs from Publix, Costco store brands. Fridge 666 says recession is good for a market economy. It is just a sign that the current market is getting old and dying just to make room for a new one. I agree with that. I definitely agree. You know, I would say that central banking in general has really exacerbated market movements specifically. So if you look at the V-shaped bottom that we had after COVID, there's you could have timed it perfectly with the introductory of monetary stimulus or quantitative easing, also fiscal stimulus as well. So now that the Federal Reserve is removing the punch bowl, or taking the punch bowl away from the party, it seems as if not only are you seeing equity price declines, but you're seeing the economy roll over as well. Now, I think maybe it was Dan Zhang or Sparks Carnival, I forget, was mentioned AWS, Amazon AWS tonight. I think some more breaking news out of Amazon is they're extending their AWS hiring freeze well into 2023. So we always hear and we always talk about these major tech companies, big tech companies, laying off thousands of workers. You know, Twitter laid off about 50% of their workforce. Meta laid off 11,000 people. But you're also seeing a lot of these big tech companies, which is never good to see.
It's our generation's screwed up.
Hey, touring different places. This is Hey Tom, I'm just joining. How are you? Doing good, my friend. Hopefully you're having a good Wednesday night. Hey, Billy is here. Says I only eat chicken, rice, egg, oatmeal, and vegetables to get everything at Costco. Edward Adams says the biggest drawback to the food delivery service from the supermarket is that you have to trust a stranger to pick out your produce and meat, and a lot of people don't want to do that. That's very true. Yeah, sometimes when I'm buying like people in front of you, they're putting their hands on every single piece of every single steak just to pick the right one. So that is definitely true. Definitely very true. So this is Madison Avenue. Look at how clear it looks. Usually after 8:30, the further east you go and the further west you go, tends to be very, very few foot traffic, very low foot traffic. But the majority of the foot traffic is around 5th Avenue over 6th, 7th. I noticed there was a ton of people in the city today. Now, usually when I come to the city, which is every day, but I've noticed that a lot of workers come Tuesdays, Wednesdays, mainly Tuesdays and Wednesdays to the city, and then the city is usually dead on Mondays and Fridays. Just a testament to the hybrid work scenario, I guess. Dan Zhang says, Tom, do you think that these big tech companies have spent way too much money in the past when the market was good? For example, Amazon spending almost $1 billion for the Lord of the Rings series? Absolutely. Well, and that's all by design, right? They're encouraged to do that. Just like how consumers are encouraged to do that too, right? The basis of monetary policy is setting the price of money, right? Quite literally, setting the price of money. So if you have an environment where money is so cheap or debt is so cheap, well, why not take on as much as possible to expand operations, to hire new people, invest in research and development, and sometimes even launch share repurchase programs. So I agree. I think things did get extended, but I think that was sort of by design, right? And that is why many people out here are part of the, end the Fed movement. Because if you really think about it, it's a very, very managed market. A very, very managed market where the people who are very well connected and who are on top of monetary policy, who understand central banking, these are the people that tend to get ahead or are best or more apt to position themselves appropriately for the environment. When the average, retail guy doesn't really pay attention to monetary policy, doesn't really pay attention to interest rates, doesn't understand the ramifications of changes in rates and fluctuations in bond prices. So I think we're going through a massive unwind period right now. Hey, Paul Tricky says, hello, Tom, H2O break. I don't have any water with me today for whatever reason, but I don't think I need any water because it's cold tonight. Very, very cold. As we walk up Fifth Avenue, but good to see you. Hey, Ibrahim Azam, welcome, my friend. Good to see you. Sparks Carnival says Fed Governor Christopher Waller said he's open to reducing the level of interest rate increases to a 0.5 percentage point in December. Yeah, I think that's pretty much consensus, right? So we're coming off the back of 4 consecutive 75 basis point rate hikes. 4 consecutive 75 basis point rate hikes. With the anticipation that in December, the Federal Reserve only raises 50 basis points. But here's sort of where I think I go against the grain a little bit with a lot of other market participants. I think they're focusing too much on the rate at which rates are increasing and not so much the duration. Really quick, this is the Diamond District. I think about a couple days ago, there was a big robbery here in the Diamond District. Did anybody else see that? Did anybody else see that? I think there was a big break-in or like a heist or something like that. Who knows? But I think the biggest thing, and Fed Chair Jerome Powell, if he said it once, he said it 1,000 times. He said that they believe that interest rates are going to need to stay elevated for longer than anticipated. Right? So even if you do 50, 25, 25, 25, all the way through the remainder of 2023, rates are still going higher. And I think it's going to be a very difficult environment for corporations to deal with that, because if you look at over the past 14 years, and the Wall Street Journal did a really, really good write-up on this, where corporations took on trillions of dollars worth of debt. And through 2022, through 2023, corporations are going to need to come up with an additional $200 to $300 billion to cover the cost of that interest. And there's only, I would say, a handful of companies in relation to the broader publicly traded companies that are probably going to be apt to deal with that. There's a lot of zombie companies out here, and we've sort of reviewed what that means before. But it looks like they are just putting up the Christmas lights here at Saks Fifth Avenue. This is East 49th Street and 5th. Now, in my view, here at Saks Fifth Avenue by far is the best sort of holiday lights display. And it seems as if they're going up today. I'm not sure when it starts, but this is the best one by far. Hey, Brian Glover is here. Says, good evening all. What's up, Brian? Good to see you, my friend. The one and only Fred X says, good evening, Tom and Walkers. What's up, Fred X? DJ Blackjack says, Tom, I haven't heard much about these Amazon brick and mortar stores. Did the idea flop? You know, I don't know if it flopped. I haven't really been in many. I think I went in once with a friend. But supposedly, are you talking about the Amazon Go stores? Because supposedly there's no employees that work there except the people who stock the shelves, but there's no cashiers, right? So you walk in and you walk out with the food, and it automatically charges your Amazon account. But I don't know if they've been a flop or not. I mean, I've been in one time. Anybody else in the chat ever been to the Amazon Go stores or maybe frequent them? Michael Joseph says the Saks lights do a repeating show every 20 minutes. Do you know when that's going to start, Mike? Do you know? Using people says you think living in an Airbnb for a year versus an apartment for a year is foolish? Yes. Because if you live in an Airbnb for a year, it's probably going to be like 20 times the cost of just leasing an apartment. All right, so we are here at Rockefeller Center, and you could actually see the Christmas tree all the way in the back. It's covered in scaffolding because they're putting on the lights. But once it's all lit up, it is going to look fantastic. This is a shot of 30 Rock here. Now, if you guys are enjoying tonight's live stream so far, feel free to hit the like button on the stream and hit the subscribe button if you're new. We usually do these live streams about 5 days per week between New York City and Miami, and we would love to have you guys a part of the streams. Let's see if we can get a better view of what they're putting up here at Saks. Hey, Brian Glover, what's up? So if you look really closely, you could see all of the lights, but obviously they're not going to be on for probably about another week. Edward Adams says, Tom, hit the rink and see if it's filled. Last time you went, they were filling it in. Oh yeah, it's true. The last time we were here at Rockefeller Center, they were just building the ice rink. So maybe it's already all built. Let's check it out. Vivian Francesca says, good evening, everybody. What's up, Vivian? Thank you for joining. We are here at 30 Rock, Rockefeller Center. And we covered Target's earnings report. We covered Walmart's earnings report, and we briefly talked about the home builders index that fell off a cliff yet again. Hey, Lainey, James is here. Hey, Lainey, good to see you. Funny Monkey says crypto is also to blame for the recession. Crypto is stealing money from people. People buying the crypto scams. Crypto is bankrupting people, taking money away from the economy. I do agree with the fact that the vast majority of cryptocurrencies are schemes and scams. We've talked about that ad nauseum. I would stay away from the alternative coins, the altcoins. But if you take the overall market cap of all of the cryptocurrencies, so like if you take the cryptocurrency market cap of all this nonsense, it's not even like a speck compared to the market cap of all major equity indices. So I'm not sure if it's going to have that big of a material impact. But there was a big recent implosion of FTX, which was a major cryptocurrency exchange. And, you know, as I've been saying for probably about a year now, anytime an exchange has their own token, so like FTX had their FTX token and Binance had their BNB token, or halves their BNB token, I would really stay clear and stay away from that for reasons that we discussed on previous live streams. But I can't believe they already have the ice skating rink all up now. Joan K is here, welcome. Natasha P says, I called my brokerage today to make sure they don't have any exposure or don't have any crypto exposure. Michael Joseph says, Tom, you can hear that Bankman-Fried used clients' crypto and leveraged up his hedge fund. Yeah, and that's the thing, right? It's a lot of nefarious activity. And essentially what he's done is so illegal, right? Using customer deposits to speculate in the broader markets and make investments, that is a huge no. And again, it's pretty obvious that he did do that, but I can't really say that definitively on the live stream for obvious reasons. But allegedly he did use customer funds to speculate in the market. And if he actually did do that, I think he's going to be facing jail time. So this is our beautiful Rockefeller Center scaffolding tree. Very New York looking. But the scaffolding is only up for a short while as they put the lights on the tree. And I think they're going to be doing the tree lighting. When is that? Does anybody know when they're going to be doing the tree lighting? You know, with so much doom and gloom news, there is a little bit of a walk on the brighter side. Because when you have a ridiculous, I would say a mania, I would go as far to say that this was a mania. You had a massive speculative bubble in cryptocurrencies specifically. I mean, people spending $250,000 on a JPEG, little nonsense with this NFT garbage. Clarence Jackson, November 30th. Thank you so much. So you had the cryptocurrency speculation. You had the stock market speculation. You had speculation in private equity. You had speculation in the housing market and the real estate market with all these iBuyers and the flippers. And just as the Federal Reserve inflates these bubbles, they deflate them just as fast and just as rapid. And I think that's what we're seeing, right? If you inject trillions of dollars into the economy and leave interest rates at bottom of the barrel levels, well, it forces people to go into the marketplace and speculate. And now that you're increasing the cost of capital, increasing rates, you know, the air is slowly deflating out of that bubble, but it usually ends in a crescendo. And I think in the crypto markets specifically, I think with the demise of Three Arrows Capital, with the demise of Celsius, BlockFi, and FTX, I think that's probably their crescendo. I think that's the cryptocurrency market's crescendo. Now I just think we need one in the equity market. So this is Radio City Music Hall. Now, as we walk to the front of Radio City, you are going to see the Christmas tree atop of the building. And I think when we were here in October, they were already putting it up. Alex R says, I thought, hey, CCL went from around 10 to about 25 a year ago, and now it's back to 6 and started going up. Interesting. CCL is what, the cruise thing? Fairway says, Tom, credit card balances surged in July and September, increased $38 billion to $930 billion, the largest jump in 20 years. I saw that too. That was a big headline on Bloomberg. That's very, very concerning. Hey, Clarence Jackson says maybe Jamie Dimon was right when he said crypto is worthless, but I do still think Bitcoin is here to stay. Yeah, I mean, Clarence Jackson, I think events like this are going to make people realize that Bitcoin is not all of this cryptocurrency nonsense, right? And the reason why I say that, and my thesis about it, and I've said it many, many times, just has to do with securities law, right? And I'm not a lawyer, right? I'm not a securities lawyer. I didn't go to law school, but I tend to just do basic due diligence, and the public tends not to do basic diligence on anything. So Gary Gensler specifically said that Bitcoin is classified as property, okay, digital property. But all of these alternative coins, oh, the Christmas tree is lit up. We can see the reflection in it, so we'll cross the street. But all of these altcoins, these alternative coins, are securities. So you can't just make a company, right? Because the vast majority, I would say, of these crypto coins, they have companies behind them, right? They're software companies. But a lot of times you have nefarious actors that they create these coins out of thin air and solicit them to investors, and they think they could get away with it because they're not technically classified as securities, but they will be, right? And once they are, these people are not going to be feeling well for soliciting unlicensed and unregistered securities. And this additional thing I'll say is the only sort of real value proposition that I see in Bitcoin, and I know it's a very, very controversial subject, but if you come to the conclusion that you don't like Bitcoin, then you probably shouldn't have any exposure to it. You should probably just forget about it, right? But in my view, the value proposition that I saw is it's the only thing where you could have unconfiscatable money. And by unconfiscatable money means that you have to have self-custody of your private keys. So the problem with a lot of this FTX stuff and a lot of these exchanges blowing up is people were buying Bitcoin for highly speculative purposes, to leverage it on exchanges and things like that for proprietary trading. That's just not the value prop that I see Bitcoin to do, right? Because why don't I just do that in the equity market, in the foreign exchange markets, and in the fixed income market? Why do I need to shill cryptocurrencies, right? With Bitcoin, if I have 2% of my net worth in this thing and I self-custody, that's 2% of my net worth that is unconfiscatable because I have my private keys off an exchange. But if you leave this stuff on the exchange, you've thus violated the only sort of value proposition for the thing that you're buying, which is a little bit perplexing to me, but anyway. So here we have Radio City Music Hall. Man, it looks really, really nice. They did a fantastic job. So this is on the corner of West 50th Street and 6th Avenue. Laney James says, I don't trust Bitcoin, so I don't dabble in it. And I think that's a very good decision. Peter Lynch has his famous saying. And for those of you who don't know who Peter Lynch is, he was the former mutual fund manager at the famous Fidelity Magellan Fund. And he said, look, you shouldn't invest in things you don't understand. And if you don't understand it, there's no point in even investing in it or thinking about it. Oh, you know what? They shut down the fountain because they're going to put up those, I think it's like 6 big Christmas ornaments that are always there. Those big red decorations every year. It's going to go right there. I feel as if they're doing it a little early this year. It seems like every year they do it like 1 week behind. Hey, War Walker, good to see you, my friend. Blockchain says, do you know that the US government owns a lot of BTC from seizing black market websites? Yeah, I do. And so there's a very, very famous venture capitalist who I actually had the pleasure to meet, by the way, a couple of years ago. Really nice guy, Tim Draper. And Tim Draper bought the vast majority of his Bitcoin from the US from the U.S. government that I think was seized. Does anybody know the website that was seized from? I'm blanking on it. I think it was Silk Road Bitcoin. I think he bought, for pennies on the dollar, this Bitcoin from the U.S. government that was seized from the Silk Road. And I think the Silk Road was used for, illegal, obviously illegal, but, sort of like an internet drug trade ring. Michael Joseph says, Tom, have you heard of the Dutch tulip mania? Yes, Bitcoin looks to be the same. Yeah, that is, a lot of people like to make that comparison for sure. But yeah, Tim Draper is a really really smart guy, really good guy. I enjoyed meeting him. Really quick, this is the Marsh & McLennan building. That's my old office. I think I showed you guys probably about 100,000 times. But more important, if anybody visits the city for the first time this holiday season, you have to try out this place. This is my #1 recommendation for halal food. Love halal food. It's called Adele's Famous. You could find it right on the corner of West 50th Street and Avenue of the Americas. Now, there's usually always a crazy long line here. And for some reason today, there's a it looks like a long line, but it's not a long line at all. For the people that have been watching Walks on Wall Street for a while, in the summer, you could see this thing go all the way down to the end. But it's worth it. This place is fantastic. For anybody who loves halal food, this is the best place by far right here. 3D, good to see you. You know what, let's push onward because I want to check out Central Park South. And maybe we'll head over to the Apple store. Oh, we have some big breaking Apple news. So Tim Cook came out and made an announcement that he is going to be shifting away some of the supply chain from China to other parts of the world, specifically India and in the United States. So I believe they are going to start sourcing their chipsets right here domestically in America, in Arizona, which is great news. Now, it's so funny that they're doing that because we have been having these conversations on the stream for months. And I said, and many of you too, I think it may have been Dan Zhang or Sparks Carnival, I forget, that said specifically, look, you cannot operate a business in a zero COVID environment, closing down factories, okay, telling your workers and employees to go home. Now, I don't want to get into an argument about whether it's right or wrong or COVID this and that. It's not the point. The point is, if you're a massive company like Apple and you're trying to manage the supply chain, run your business, build products and services, if you have a cog in your supply chain where a government can shut down your operations, you cannot do business like that. And with the zero COVID policy in China, it's almost impossible to do business. So this is just another domino to fall in the trend that I like to call the domestication of the supply chain. Anybody here from Syracuse, New York and upstate? Anybody here upstate New York, Syracuse? Now, there's a big semiconductor company that is going to be building a multi-billion-dollar facility right outside Syracuse, New York, that is going to bring tons and tons of jobs. The only thing I would say, hey, I see Marcelo Gill here, UBS. Marcelo Gill. I think Marcelo's daughter works UPS as a managing director, something like that. The only thing about that, right, is it's going to take abilities to come online and produce full capacity. So I think you're probably going to see the material results of that probably 2025 to 2026, but it is a step in the right direction. Clarence Jackson says, you are right, Tom. Elon said you should have crypto in a directly accessible cold wallet, not on the exchange. Agreed. Clarence, hope you're doing well, my friend. Wendy England says, Tom, companies were so addicted to dirt cheap labor and lax environment oversight. That's true. So Wendy makes a good point. Now, did anybody hear of the horror stories coming out of Foxconn? Anybody familiar with that? Now, allegedly, well, I guess not allegedly, Foxconn is one of the largest manufacturers for Apple. And supposedly the working conditions are so egregious and so horrible that I don't want to explain it, but that's how horrible the working conditions were. And I would say shame on Apple too, because you're obviously exploiting that labor, but not to get too far into the mix there. Marcelo Gil from Brazil, always a pleasure to see you, my friend. So we are now passing the flagship Hilton Hotel, adjacent from the Charles Schwab building. This is actually my broker-dealer. Hey, Cindy Foley says, good night, all be safe. Thank you for the stream, Tom and chat. Thank you for joining Sydney as always. Appreciate you. I know, Blues Writer says, we're too far uptown at this time. I always forget. We've been streaming for about an hour and a half, so we're gonna have to put the burners on the Penn Station, which is all right. But Blues Writer, thank you for the time check, my friend. Remus is best halal in the city at this corner. I have to disagree. So this is halal, guys, but I think the best halal food is actually right across the street from Radio City Music Hall, which is Adele's Famous. Now these guys are all right, but in my view, I think Adele's is way better than halal, guys. I think it's a little bit too bland, not really too flavorful, but you know, halal, guys, is a very successful business. I think they actually have retail storefronts now, one of which is in Long Island, and then you have another one on the Upper West Side of Manhattan too. Hey Mariana, good to see you. Hello from Brazil. So here is an iconic view of 432 Park Avenue, right here on Billionaires Row. Now, 432 Park Avenue, the building has been hit with a litany of litigation lawsuits from the tenants or from the residences against the developers. There's a pretty crazy New York Post article that states the building sways in the wind, it's so loud. Tons of electrical problems. A lot of sprinkler and water problems in the building. Hey Beth, what's up? Says, hey Tom, when do you usually start streaming? So we go live about 5 days a week, starting at 8:30 p.m. Eastern. So over the past couple of days, I've been starting like 15 minutes late, but we're usually on Monday through Friday, 8:30 p.m. Eastern. But if you want to stay connected with us off the stream and stay up to date on my thoughts on the US equity market, emerging markets, fixed income, real estate, and more, scan the QR code and punch in your email address, and you'll be signed up to receive my free investing newsletter. And we are going to start to get on a regular schedule with that now that a lot of my major clients no longer need my assistance as much as they did before when we were doing implementation. So go ahead, scan the QR code and you will be up to date. So a lot of the stuff we talk about on the streams, from corporate earnings to monetary and fiscal policy, all of that will be recapped in the newsletter, and you're not going to want to miss it. Hey, Ryan Beck, what's up? Hemi Power says, hey, buddy. Where do you prefer living if you had to pick just one, New York City or Miami? Ooh, that's a tough one, man. I don't know if I could pick just one. I really don't think I could pick just one, honestly. Because here's the thing. Miami and New York City are so alike and so different in many different ways, and they all serve their own purpose. I think if you're just starting out in a career, I would say you got to start it off in New York just because of the talent that is here, right? So you not only have talent domestic, stateside, but you have talent from all over the world. So you're competing with the smartest people globally in New York, right? So if you work at any company really here in the city, you're gonna meet so many smart and interesting people, and it's a good way for you to build your network. So I think if you're young, you're just getting out of college or something, I would really highly advise to start off a career here. I know the cost of living is high, I know everything is crazy, but you pay the price. It's sort of like paying the price of admission. You got to get your seat at the table, and the seat at the table is here in the city. And then once you've sort of established yourself, established a good network here, then I would branch out to Miami. That's what I would say. But now we are looking at 157, which is a beautiful building here on Billionaires Row. And you also have the Steinway building, which I think one of the viewers of the Walks on Wall Street stream was an architect on that project, which is pretty cool. Now, the Steinway building is unique because each individual floor has its own unit. Remy says 100% agree. Yeah, it's just a lot of smart people here, man. It's big competition. And, you know, we'll go this way because we'll head towards Columbus Circle. You know, another thing I remembered is once it gets cold out, my phone starts to die sooner. So we're running low on battery here, just FYI. But when I first started my working career in tech sales when I was 18, I learned so much stuff, like from not knowing anything to building a really robust network. I don't think I could have done that in Miami at the time. Now, maybe you could do it now that there's more infrastructure built down there, but definitely not at the time when I was doing it. Check it out, it's financial services, #1 in New York. Yeah, that's true. I mean, we are seeing some big shifts though, you know, we're seeing some big shifts. I mean, I told you guys, I went to I was in Miami and I got to see Ken Griffin from Citadel Securities speak at Miami-Dade College in downtown Miami. And he moved Citadel Securities from Chicago to downtown Miami. They're actually in the 200 Southeast Financial Center right now, across the hall from my office building at the WeWork, as they wait to build their massive tower in Brickell. So I think you're starting to see Southern Florida, you know, get its breaks, but I think it's going to take time. I think it's going to take some time. Man, it's a lot of garbage on the street. All right, so this is 157. You have the Park Hyatt and the residences in the same building. Speaking of Ken Griffin, you have 220 Central Park South. I believe Ken Griffin owns a unit in this building. And then you have the newest addition to Billionaires Row, Central Park Tower. Hey, Remy says we're securing a $100 million capital raise via a friend of a friend. New York City is all about building relationships. Yeah, 100%, exactly. Congratulations on that, by the way, man. That's awesome. Love to hear that stuff. Zozo Bob's is Miami is the 6th borough. That's so true. I mean, every single person, well, not every single person. A lot of the people that I associate with down in Miami are all New Yorkers. They're like, yeah, I'm coming from Port Jeff. I'm coming from Port Washington. I'm coming from, you know, Manhattan, Lower East Side, Upper West Side. A lot of New Yorkers down there, you're right. Michael Joseph says this should be a bullet train from New York City to Miami. Well, speaking of that, that's another reason why I chose Miami, Florida over another city, right? I was thinking about Denver. I got nothing against Denver. I like Denver, Colorado a lot. I went on an interview with a big cybersecurity company that specializes in identity and access management. It was actually just taken private by Thoma Bravo, which is Orlando Bravo's private equity firm. And it was taken public by Vista Equity Partners. Anyway, so they're a competitor of like Okta, ticker symbol OKTA, but their headquarters is in Denver. But the thing is, if I'm gonna travel back and forth between Denver and New York, that's too long of a flight and it's too expensive. I could buy a ticket to Miami, you know, $80, $100, depending on the time of year. And I'm there in 2.5 hours. You know, so if a client needs me in New York, you know, I could buy a ticket same day and be in Miami 2.5 hours later, or be in New York 2.5 hours later. I can't really do that with Denver. The frequency of the flights and the expense is just too much. Wow, Zozo Bob's says the Denver airport is 27 miles from the city. Crazy. Hey, Destructionist, what's up? Western Mass Dave, how are you, sir? Always good to see you. Melissa 2087, this is 39 degrees. It's freezing tonight, freezing. Emmanuel says New York City and California. Next Detroit going on? Or the next Detroit going on? Ryan Beck says, plus it takes forever to get to the airport in Denver. It's been pretty easy in Southern Florida. Now I live equidistant between Fort Lauderdale or Miami, so I could go to either one. I choose to go out of Miami International more than Fort Lauderdale, but mainly just due to the frequency of the flights. Okay, so we are making our way towards Columbus Circle. And at the end, you can see the Trump International Hotel and Tower. It seems as if somebody is in the top penthouse there. I think it's for sale. I was looking at Zillow. I think the top half floor of the Trump International Hotel is for sale. So maybe they're showing it, or maybe they're doing an event there. Who knows? Okay, so Ryan Beck says if you fly southwest out of Fort Lauderdale, it's not too bad, but you prefer to fly Miami? Yeah, same here. I usually take American Airlines. So really quick for fun, in the chat, what is the preferred airline that you guys always fly? For me now, it tends to be American. It used to be Delta, but I usually fly American now. What about you guys? United? Edward flies United a lot. Hey, Noodles, good to see you, my friend. Lainey James says Delta or Alaska. Chelsea C says JetBlue. Check it out, says JetBlue. Pretty good. JetBlue's pretty good. Melissa 2087 says I like AA or Delta, but I've flown most on Frontier, not my favorite. Yeah, I'm not a big fan of Frontier. J Peaks is Delta. A lot of Southwest, I wasn't expecting that. But Zeta Lopez is Delta. Interesting. War Walker's like whichever is the cheapest. Yeah, I don't know if I could do Spirit, man. I don't know. I mean, if I'm paying $100 for American Airlines, and I can get a ticket for $50 if I fly Spirit, I'm gonna spend the extra $50. I mean, it's diminishing returns after a certain point, and for the aggravation, I'm not gonna put myself through so much aggravation to sit on, the Greyhound in the sky. Melissa 2087 says I prefer Spirit more than Frontier. Well, I think there was some M&A activity there, right? Isn't Spirit and Frontier merging, or is that another airline? I think there's big merger going on. All right, here we are at Columbus Circle. Funny Monkey says Florida used to be a great place to retire, but it is now too expensive and too much tourism. Climate change causes very bad hurricanes and hotter temperatures. Yeah, I mean, that's true. You know, we just got hit, well, not me, but Florida got hit with two big hurricanes recently, Hurricane Ian and Hurricane Nicole. But Miami was spared, thank God. We didn't really get much damage at all. Spirit and JetBlue, got it. Hey, Wonder Bread is here, so just checking in. Good to see you, my friend. Welcome. I don't know. I think it's, what do they call it? The cost of living in paradise. It's a good mix to go down to Miami and have it be 80 degrees when it's, 30 degrees here. It's not bad. Hey, Al Baker says hello from Hollywood, Florida. Good to see you, Al. Glass of Beer 12 says we're coming from Thailand. Hey, awesome. Love that. So here's the Deutsche Bank Towers here, formerly known as the Time Warner Center. Wow, check out this view of Billionaires Row, 157, 220 Central Park South, Central Park Tower. No, Marcelo Gill, I think it's just the wind. It's so windy here. It's crazy. Columbus Circle usually has a lot of wind, so. But when it gets cold, the battery runs down really, really low, very fast. So I think we're actually going to need to call it a night a little bit early because I do need to use my phone to get on the train. But we will be live tomorrow, 8:30 p.m. Eastern Time, if you guys want to join us. We will be going over the financial markets. We'll be doing a deep dive into monetary policy, and we'll have a good time walking around New York. So everybody, thank you so much for joining. It was fun. We covered Walmart's earnings, we covered Target's earnings, and we also talked about the housing market. If you want to stay up to date on our market thoughts, scan the QR code, punch in your email, and you'll be signed up to receive our investing newsletter, where we cover U.S. equity markets, emerging markets, all that good stuff. So Remy, thank you so much for joining, my friend. We will see you tomorrow. Wendy England, Joan K, Brian Glover, Marcelo Gill, Beth. Thank you so much, Beth. Appreciate it. Vivian, Fairway, MSK, Noodles. And if you want to connect with us on Twitter, you can follow @Walks Wall Street. We're always active on there posting stuff. Mona D, thank you so much. Laney James, Touring Different. Rita. Bringhamton James, Fred X. Outer Haven, Robert. Michael Joseph. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere and you just need to know where to look. I'll see you guys right back here in New York City tomorrow, 8:30.